IMF coming right now and saying that Asian countries should make use of swap lines, that they see the use for capital flow measures in Asia during this pandemic. Of course, we have seen already the strength of the U.S. dollar being bid up given the safe haven move. How will this impact South Asian markets overall?
Good morning. So I think you identify an absolutely essential aspect of the current situation, which is the availability of dollars, not just within the American financial system, but globally. And I think the pace and the scale of response, most obviously from the Fed, but also global policymakers more broadly, to try to speak to an array of problems, but specifically this one. The Fed, back in 2008-9, it took several quarters to get some of these global dollar swap lines organized. The Fed has achieved this in days this time around, which is quite extraordinary. So I think the steps that the Fed has taken over the last couple of weeks should help address this exact vital problem of making sure that there are enough dollars flowing through the global and Asian financial system to help economies continue to fund. Because, of course, the Fed isn't just the Reserve Bank of America, it's also the de facto Reserve Bank of the world's trading and economic system.
And Ben, of course, we continue to see improvement in economic data out of China. Will that help keep the Chinese renminbi supported, or will the strength of the U.S. dollar really offset that? And what does that spell for the markets?
So I think the Chinese currency has been very interesting in that it's been rather stable over the last several weeks and even months, even when the virus was centered in China itself back in February. So I think China, even with the rate cut that we've seen over the last few days, still has a fairly dramatic interest rate differential with the U.S., which for me suggests that the Chinese currency should remain rather stable. In terms of your broader question about China normalization, I think it is extremely important, obviously, for China itself, in terms of the PMI picking up to suggest there is this normalization. It's not going to happen overnight, but people are returning to work and are returning to spending and so forth. So, of course, that is very, very important for China. But it's also, in a way, it's a postcard from the future as we think about economies like New Zealand and other European countries potentially looking to open up their economies over the next weeks. China is something of a template for how quickly economic activity can normalize and give us a sense of the alphabet question, whether it's going to be U, V, W, or some other letter.
Yeah, it's alphabet soup when it comes to predicting that trajectory of the recovery, right? Does that mean that if we get a quicker and more robust and sustained recovery out of China, that there's more positive risk to the upside, particularly when it comes to emerging markets? Because as we spoke about, as Sherry spoke about, was the stability in the yuan. If that continues, if Chinese assets continue to remain stable, that anchors EMs to a certain extent, doesn't it?
I think there's definitely a couple of helpful things for emerging markets. One we touched on at the beginning of our conversation, which is dollar liquidity. So with the Fed now providing large quantities of dollar liquidity globally through those swap lines we talked about, that is extremely helpful. And secondly, as you say, if China is doing better, and I think there will be more stimulus to come, by the way, even as the economy normalizes. So we've already had a couple of rate cuts. I think there will be fiscal stimulus to come. So that combination of dollar liquidity and China recovering is normally quite constructive for emerging markets more broadly. So we at the BlackRock Investment Institute, we are overweight emerging market bonds in the local currency space, and we are overweight Asia ex-Japan equities. And a large portion of that really is to do with this recovering China, because China has the scale, the capacity and the will to bring about whatever it takes, if you will, whatever it takes style stimulus to get that economy back to more normal levels.